Stock market indexes remain relatively stable. Today we are going to have a look at the fundamentals by discussing the release of the Fed's December meeting minutes later in today's Asian session, the release of the US December employment report, and drill deeper in the damaging presentation of NVIDIA as well as Meta Zuckerberg's U-turn. For a rounder view, we are going to conclude the report with a technical analysis of S&P 500's daily chart. The Fed seems to continue to hesitate in cutting rates further. Currently, Fed fund futures imply that the market expects the bank to proceed with a rate cut in the May meeting and remain on hold after that until the end of the year, with a December 2025 being currently highly doubtful. Yet in its latest dot plot, the bank signaled 2 rate cuts within the year. Hence, we highlight the release of the Fed's December meeting minutes later in today's American session as a key event for US stock markets. Should the document maintain a dovish tone, practically underscoring the bank's intentions to continue cutting rates albeit cautiously, we may see US stock markets gaining some support as it could enhance the market expectations for rate cuts to come. On Friday, we highlight the release of December's employment report as the next big test for US stock markets. The NFP figure is expected to drop to 154K after November's stellar 227K, the unemployment rate to remain unchanged at 4.2%, and the average earnings growth rate also to remain unchanged at 4.9% year-on-year. Should the rates and figures come in as expected, we may see the drop of the NFP figure disappointing traders somewhat and thus allow for a more dovish stance on behalf of the Fed, thus supporting US stock markets, albeit most would have been priced in already. Yet the actual release is well known to take the markets by surprise, and should it show a tighter than expected employment market for the past month, we may see it weighing on US stock markets and vice versa. We note the wide drop of NVIDIA's share price on Tuesday. The presentation by NVIDIA CEO Jensen Huang at the CES Tech Trade Show in Las Vegas seems to have left investors wanting for more, as per media. Investors may not have been convinced for the wide use of artificial intelligence in its products as they may have been expecting. The presentation was reported as being centered around the graphic cards for gamers, while investors may have been expecting wider plans on how NVIDIA could influence the chip market. Furthermore, despite the announcements being important as such, they seem to be lacking the short-time upside potential. Despite the drop, we expect the fundamentals to build support for the share's price once again. Dow Jones is constantly testing the 42,400 support line, yet seems unable to break it. We tend to maintain a bias for a sideways motion of the index to be maintained between the 42,400 level and the 43,380 resistance line. On the flip side, there seems to be still a bearish predisposition for the index among market participants as the RSI indicator remains steadily below the reading of 50 for over 2 weeks now. Finally, we also note the persistence of the index's price action to continuously test the 42,400 support line. Yet for a bearish outlook to emerge, we would require the Dow Jones price action to clearly break the 42,400 support line and take aim of the 41,620 support level. On the flip side, should the bulls take over, we may see the index breaking the 43,380 resistance line, which marks a turning point in the upwards motion of the index's price action on the 26th of December, and even higher, we note the 44,200 resistance base. Thank you for tuning in to our financial news. From all of us here at IronFX, we wish you a solid trading.